If you want a shortcut to be profitable in trading every time, please leave this video right now, as this is impossible. But if you want to learn actual information that professional traders use to gain advantage in their trading, watch this video carefully. Why do you think the price moves upwards? Because of a triangle pattern. Or why does it move downwards? Because the MACD indicator gave a sell signal. Actually, these patterns, indicators, and other tools in technical analysis only tell us what already happened in the market. They don't directly cause any price movements. Price of an asset usually changes because of things like differences between how much people want to buy and sell that asset, important news, the economy, politics, and big traders in the market. These big traders are usually large financial institutions. They have a lot of money to invest, which can make prices go up or down a lot when they buy or sell. We call this kind of money smart money. On the other hand, there's dumb money, which refers to money that small traders invest, like regular people who don't have much money to invest. So if the regular traders could follow what the smart money does, they might have a better chance of making successful trades. There are different ways to know when the smart money is going to enter the trading market. We can know this either by looking at trading volumes, studying hedge fund activities, analyzing market sentiment, or a trading indicator that can do all these things for you. In this video, I'll show you a new indicator on Tradingview that can help you track smart money, and then I'll teach you how to combine it with volume indicators to find better trading opportunities. So to add this amazing indicator to our chart, we will click on Indicators tab and we search Smart Money Interest Index. After that, we will add this one, which is created by Algo Alpha. This is the indicator, and as you can see, it's added here below the chart. As you can see, we have a histogram which is green in color, as the name of the indicator is indicating it's an index showing the interest level of smart money. Furthermore, we also have a yellow zone here, which is the high interest threshold. When the histogram is in this level, it shows a significant interest from the smart money. If we open the settings of this indicator from here, in the settings of this indicator, in the Inputs tab, the high interest threshold value is set at 0.9 by default. For volatile markets like Forex and crypto, this is a good level, but for some less volatile markets like stock market or indices, you may need to decrease this level. At the core of this indicator, there are negative volume index and positive volume index. These are used for analyzing the smart money and dumb money. I've already explained earlier in this video what smart money and dumb money are. The next point we are about to discuss is very important if you want to use this indicator properly. The negative volume index is a cumulative indicator that was developed by Paul Dart in 1930. This indicator uses the change in the volume to know when the smart money is active in the trading market. Similarly, positive volume index is also an indicator created by the same author. This indicator is used to identify when dumb money is active in the trading market. Now we come back to the indicator we are using. This indicator uses both positive volume index and negative volume index as a base for identifying when smart money or dumb money is active in the trading market. Then, with the help of relative strength index, it makes a ratio that can show buying or selling pressure. It also uses a long-term peak normalization to ensure that this index remains relevant. Let's see the value of this option in the setting. We will open the settings of this indicator again. In the settings of the indicator, we can see the volume flow period option is set at 14. This is actually the RSI period for buying and selling pressure of the smart money and dumb money. This is a normalization period which is set at 500, and it's for ensuring that the index remains relevant. The default settings generally work very well unless, depending on your trading strategy, you may need to adjust them. For the strategy that I'm going to share in this video, the default settings are fine, so don't change anything here. So when this green histogram reaches to this level, which is yellow in color, we expect that a considerable advance or declining in the price is going to happen. But this is a general signal, so we need to add another indicator that can help us to open a trade on the best price with a minimum amount of risk. By the way, if you don't feel like analyzing prices yourself, you can join my free Telegram group. Here I share daily the buy and sell positions I open. The link is in the description below this video. So we will open the Indicators tab again. Here, we will search for Relative Strength of Volume Indicators by DGT. After that, we will add this one, which is created by DGT. So this is the indicator, and as you can see, it's added here below the chart. The bottom part of this indicator is a simple volume indicator, and in the upper part, we have RSI with a volume indicator. In the context of RSI, this indicator is one of the best volume indicator on Tradingview platform. For our trading strategy, we need to change some settings of this indicator. For that, we will open the settings of this indicator from here. We will change the length of this indicator at 9, and we will change the histogram companion option to moving average. After that, we will open the style tab from here. We will remove the relative strength volume option because in our strategy, we only need RSI. After that, change the value of overbought lower threshold option to 70. Also, change the value of oversold higher threshold option to 30. And finally, I will also change the middle line option color to yellow. And these are all the change we will do for this indicator. And now that our trading chart is set, let's go through the proper rules and condition for opening a buy and a sell trade using these two indicators. By the way, if you were wondering which exchange I trade Bitcoin and other cryptocurrencies on, you can press the link below this video and take a look at Bybit. As I mentioned earlier in this indicator, when the histogram reaches to this yellow level, it shows that large capital is flowing in the market. So when we have the histogram in this yellow level, we will wait until it goes below this yellow level again. When this happens, we want the volume bar to be gray in color. If it is not gray in color, we will wait until it becomes gray in color. When the volume bars are gray in color, they show that the volume is below the average, and we have a period of low volatility in the trading market. We wait for a gray volume bar because this is where usually the smart money enters in the market. Now that we have a gray bar, we will wait for the volume bars to go above the average line. When the volume bar is above this average line, the bar turns to either red or green color. We don't pay attention to the first bar that goes above the average line because this can be still affected by the prior flat market. We will focus on the second bar that goes above the orange line. If the bar is closed above the average, then here our RSI will help us to know which direction we should enter. One important thing to note over here is that we don't care about the color of these volume bars. We only care that their levels are below the average or above the average line. So finally, if the RSI is above the center line, we will consider this as an opportunity for opening a buy position. I'm going to repeat all these conditions quickly now so that no confusions are left. To open a buy position, first of all, we will wait for this histogram to move above the yellow zone. And then we will wait for this histogram to move below the zone. After that, we want a gray colored bar to appear, just like it did here. And then we want 2 bars to move above the orange colored average line, just like it did here. After that, for the final condition, the RSI line should be above the center level. So now let's open a buy trade here. You can set the stop loss below the previous swing low. And if you feel it's too close to your trade entry, you can set it farther away from your entry. You can set the take profit targets at the level that makes your risk-reward ratio equals to 2, and this is the minimum. And depending on your trading experience, you can stay longer in your position and get the most out of your possession. This was a setup for opening a long position. I hope I have cleared out any confusion regarding the rules if there were any. Now let's go through the rules for entering a sell trade using this strategy. If you don't have time to watch indicators all day, just join our free Telegram group for daily trade signals. The link is in the description. Here you can see that the histogram again went into the yellow zone, giving us the signal that we have a high interest by smart money. As I said, we wait until it goes down, and it is below the yellow level. When this happens, in this indicator, the bar should be gray in color. If it is not gray in color, we wait until we get a gray colored bar. Depending on the market condition, it could be 1 gray bar or more than 1 gray bar. Then we wait to have 2 consecutive bars above the average line. When we get the second bar above the average line, we check the RSI to get a confirmation of whether we should open a buy position or a sell position. If the RSI is below the center line, like it is here, this is a signal for opening a sell trade. So we can open a sell position here. We can set the stop loss above the previous swing high. I hope you have understood the rules for entering a buy and a sell trade using these indicators, and I hope you gain benefit from the information I've shared in this video. This is going to be it for this video. Thanks for watching the video till the end. I'll see you guys in the next video.